going on, traders? Welcome to the channel. I'm John. Let's Groot. We bet $200 to see if we can make $43,000. Let's see how that goes. It's a pretty low probability. And we trade options here. All right, traders. So before we get into that bidness, let's talk about something that was really important. You saw in yesterday's video, we opened up 3 covered calls. So 2 of them were in Mara, 1 was in AMC, and actually the neat thing is 1 day in trade for those, about $160 in profit. So I'm pretty happy with that. But let me explain this. In Mara, closed one of the trades that was open. It was basically about 25% profits, about $40 or $50 in profit. Great, I'll take that all day. The other one I let ride since I couldn't get the fill that I liked. Now here's the funny thing about this one. I talked in yesterday's video, I'm like, I swear I set up one for about $250 in credit, and this is the one. So it literally didn't show up till this morning in my account, and I was like, what the heck? Robinhood, you need to figure that out. That is craziness. So anyways, nonetheless, I'm happy I've got it because the trade did work out in my favor. Great. But if it wouldn't have in these covered calls, then that would have kind of not been great because I didn't know that I had this trade on, and my intention wasn't to have my 200 shares in contract for a covered call. So that was a little bit sketchy on Robinhood's part, but let's talk about the important one, which is the trade I set up today. So first and foremost, highly risky trade, okay? There is a strong chance this goes to zero, but I want to explain the mechanics of it so it's better for people to understand. And one, not a financial advisor, okay? This is just kind of my trade journal. I want people to actually see how trades happen, what goes through my head. It's kind of like my stream of consciousness. So I would just want you to understand what goes through my head as I'm doing these trades. So first and foremost, let's look at the SPY. This is what my trade was in. So SPY is S&P 500, and you are seeing this kind of exhaustive action. Okay, you see this right up here. Let me just mark it out if we have to. Will they let me rectangle it? Let's do that. Okay, so basically what you're seeing here in this little setup is even just taking the past week's worth of trading. Look at that. We have big bars rally to the upside, and then you see exhaustion as we get closer and closer to the top here. And what happens when you see that type of situation is you need the market ebbs and flows, right? So if you start to reach exhaustive points in trading, we start to see volatility happen. And I had said this in previous videos, there's like an up and down flow in the market. We go up and then we pop down, up and pop down. And really what we're seeing here is either brand new fresh highs in the S&P 500. You know, that should be a time to celebrate, but look at the volume. It's super weak. So to me, I'm making a really tiny bet in the account. I'm okay if it goes to zero. I live to trade another day. And what that bet is, I'll go to the Tastyworks account so you can see it. It's in the SPY, and let me get rid of this nonsense so you can see the real deal. And what that is right here. So I bought a put in the SPY. It is at the 428 strike, 5 days to expiration. And here's the crazy thing. Let's check this out. I'll look at the analysis. And as you're looking at this, you know, if we go lower just in a couple days, say we go like 5 points lower, that's $600, $700. If we go like 15 or 20 points lower, we're starting to look at about 2 to 3 grand in profit. So not too bad. I'm happy with that, especially for a small bet of like $200 or so. So that's not too bad. I paid 221 here. And to set up that trade, what you end up doing is you basically go to, you can do this in Robinhood, Webull, Tastyworks. It's all the same situation. But basically you type in the ticker, you want to go to trade options, and then what you do is you see what's called an option chain here, and there's tons of different options expiration dates. And so what I did in this situation is the nice thing with SPY, they do every about 2 to 3 days there is an expiration date. I just went about 5 days out. So again, really short-term play. The reason this is risky, when you're playing with options, you're saying, hey, by this date, we need to be at this price, and that way I can make this amount of money. That's really like the real reason you enter into contracts like this. And there's a ton of different ways to trade and play with it. So if you're kind of new to this, you know, stay with it. It takes some time, but honestly, like options are not as hard as some people make them seem. Okay, it's tricky. There's a lot of weird lingo, but stay with it. It's really just about understanding there's a date in the future, there's a price level, a strike price, and then how is it in relation to the underlying stock that you're looking at trading. As an example, puts are on the right, calls are on the left. I bought a 428 put The stock here is trading at 426, almost 427, okay? And so what is happening, I am in the money because this put that I purchased is betting that the stock goes lower. So as this goes lower, again, just to reiterate, we go from like this 428, 425, 420, you start to see my profit curve go way higher, okay? So again, there's no guarantees. We don't know where the market's going to go. I definitely don't have a crystal ball, and that's why I'm not betting the farm on these trades, right? And what's happening is I paid 221 for this trade. So as I go here, you're going to see 221. That means I paid $221. That is my max loss. Maximum profit, whoa, 42,000. So what you're telling me is if in 5 days whole stock market crashes to zero, then yeah, I'm going to make some profit. But again, that's not my goal. I don't want the market to crash to zero. That would be horrible for not only myself, but everyone. We'd have bigger problems to deal with. But my probability of profit, almost a coin flip. We're at about 43, 44. When I enter this is about 46%. So let's just say about almost a 50% coin toss there. And what I'm fighting is two things, okay? There's extrinsic value and time, which is theta decay. So let's talk the easy one, theta decay. That is, I'm losing $10 a day right now. The next day it'll actually accelerate to about maybe 12 or $15 and so on. So theta decay can be your best friend or your worst enemy. In this case, it is an enemy of mine because now what I need to offset that is I need the stock to go lower. So basically I need the market to kind of have a little correction and it will overcome this theta decay. And then lastly is extrinsic value. So there's something called intrinsic value and extrinsic value. It's kind of a hard thing to understand for some people. It actually took me a while when I first started, but the way I can explain this is if a contract is worth something at the end of its cycle, at basically at expiration, it's like, hey, time is up. What is this worth? That is intrinsic value, meaning if this is basically 2 points away from current trading price, like if we just stayed where we're at, there is actually some intrinsic value in this contract. So I paid 221, the extrinsic is $100. So you just take 100 off of that, and the true intrinsic value here is basically $121. So I still hold some value if we got to expiration and there was no change in the stock price movement. Okay, so that's kind of a way to explain that or think about that. And as a contrast, let's say we go out further. Maybe I instead buy the 420 put, and that's $33, right? So I pay less for sure, but I'm literally risking everything because this is pure extrinsic. There is nothing that this is worth until we actually move in the money on this 420 put. All right, so that's kind of an easy way to think about that. I hope that makes sense for you. Definitely check out this next video that explains some other income trading strategies. Basically, what you want to do is understand the credit spread. That's another version to making money, especially on a weekly basis.